Hi guys, this is Prashant Rao and thought we'll look at a couple of charts. It's been an interesting day. The huge run in the stock market. So let's start with the S&P. And um, I think a couple of days ago when I was looking at the chart, I mentioned that this kind of a bounce is pretty typical in the context of this double top that we saw here. And the market would either move downward, which was more probable, or it would rocket upward. And sure enough, it rocketed upward. And so while it's a little unclear where it's headed from here, I mean, it might still get into this pattern here and come all the way down. We don't know what's going to happen. But I had a couple of things to say about trading in general. So a few days ago, I was looking at First Solar and I mentioned that I went short somewhere around here and I put a stop loss here, here and here. So uh, right now what we're seeing is essentially a huge bounce from where it went off. So it went all the way down to 38.6 whatever, and now it's back to 42. So when you see a rally like this in the stock market, a massive rally, the beaten down stocks tend to get carried along with the rally, and they usually see a massive jump percentage wise. Although, if you look at the bigger picture, those kind of jumps are very small when you look at it. So if you're entering here and you have a stop loss here, and then the market is turning against you, so the question that you have to ask yourself is my thesis wrong? Is my analysis wrong? Or do I need to do something else? Do I need to get out completely? What should I do? And very often, what happens is that once the rally fizzles or you get into normal mode, whether smaller uh, moves, whether upward or downward happening in the market, like normal kind of moves, then these stocks tend to get sold off, and the ones that were the leaders tend to move higher. So this clearly is not a leader by any measure. So if you look at the weekly chart, the pattern is still very much intact. So we are still in this pattern, and we saw across the neckline, saw a bounce, and we saw this key reversal. Now we're seeing this little bar, which looks pretty huge, but when you look at it from a larger context, it is actually quite minuscule. Uh, so should you get scared out of this trade? Probably not. So what should you do in a situation like this? So there are two things that you could do. Uh, and before that, first off, you want to make sure that you're not putting in uh, too much risk capital. And I mentioned earlier that you want to keep it at 1% of your account, or maybe 2% uh, if you're really feeling very confident about the trade. Let's say that you're at 1%, and then this thing starts turning against you, but your thesis is still intact. What do you do? What you would do is you would cut down your position size as it moved higher here and widen the stop loss. So instead of having the stop loss here, you widen it, and you can see that even after widening the stop loss, you're still looking at over a 1:3 or 1:4 or maybe even a 1:5 risk reward ratio. So this is still well intact. It's likely to head lower, and cut down your position size it crosses beyond this new stop loss, that might be a good time for you to get out. And in the end, you don't walk away with a huge loss, um, uh, but maybe a minor amount. And this kind of action, price action, happens a lot more frequently than most people imagine. It just occurs in almost every trade. So if you get scared out of the markets by this small little rally, and and especially that happens if you're short with say 50% of your account in the stock, then a move like this will really scare you out of the market. So make sure your risk is um, kept in check, and cut your risk in half uh, if it goes against you, and if your thesis is still intact. And if it's intact, then just stay stay on for the ride. So that's that. I would say the same thing about Delta as well. Nothing unusual. It's quite expected to see this kind of a move. It's likely going to head down. Uh, the trend is very much intact, and if it you can cut your position size in half and widen your stop loss, and that way um, you're not going to lose a whole lot, but you still maintain a good risk reward potential. So um, that was generally about the markets and how you should look at trading, in my opinion. The other one that I've been watching closely was gold, and gold today formed this key reversal. So I'm currently short gold, and it is right here. It's formed this double top, this key reversal. And um, so earlier, if you recall, we were in this continuation pattern, broke out, and now it's breaking down. So uh, this kind of price action is not so dissimilar from what we just looked at. Um, so in one case, it was before. I mean, in all cases, actually, before it moves lower, it's probably going to move higher, and that's exactly what happened. Um, this is a bear trap, as and you want to be careful about this. So likely path, I expect it to at least head until somewhere around this area where this kind of action originally started. And if you go beyond that, interestingly enough, on the weekly, you can see that this has a potential to form a weekly reversal, key reversal. And if that happens, you're looking at approximately somewhere around 1600. So currently short gold, watching this closely, and we'll see how this goes. So that's all for now, and I just wanted to talk about uh, market movements and how to manage risks in an environment like this. I thought this is a perfect example of what would typically happen if you entered a trade. It just moves against you, it's inevitable. But as long as your thesis is intact, just stay with it, and it should hopefully result in the right outcome. If not, your widened stop loss should take care of your losses. All right, that's all for now. Thank you. See you next time.